Hey guys, Roman here. Just going to do a quick tutorial on Oracle. It's an update, so there might be some changes, but we'll just do a refresh anyway as well. So the first option on this indicator is called the CTF power candle. CTF means current time frame. Okay. So when you got that ticked, you'll see that there's a new color and letter and an arrow on certain candles. Okay. So on the weekly time frames, there's not too many, right? And we see these. So what they are is it's suggesting that trend may reverse when it goes red, and then you want to combine that with other issues, not issues, but indicator signals, maybe a SIL signal, or maybe a divergence, bearish divergence, or an SFP like we got here. So if you can combine a few things like that, you want to start paying attention. We can see another one here as well, and then price carried on from this one. So that's why we don't just blindly sell when we see these, but we pay attention to the following candle. Okay, so this one here has closed greater, not greater, sorry, it's closed bullish, so we can see that it's trying to push away from it. Okay, so it's not a bearish reaction like over here, but we can see that it's held this level and then carried on. Okay, so that's what's important. Usually, if and when you lose that particular candle, that's usually when you have some kind of trend reversal. Okay, we'll go to maybe a daily time frame and see them a bit clearer, a bit of an understanding on that. Right, so very similar to what we just saw. Right, there's one here, a little candle there. Okay, and what we saw is once that's come in, even though it was an SFP here, that price failed to lose it afterwards, and then we got to push up again. And then we see this one here come in, price pushed away, and then lost it, and then couldn't get back above it for a while. And then now that is a permanent resistance until we can get back above that, right? So this one here tried to reverse the support, tried to take off, lost it, couldn't get back above it, and it's been sold off. So the P candle and the key candle body, the trading strategy around that, is probably one of my most sought after trading strategies now, combined with a few oscillating approaches. But let's go and alter this so we can see some more. So by default, you've got the red lines, which usually mean that's from a bearish one. So the move down, right, the line is red, but it's green to remind you it's probably going to reverse. Like you got here, the SFP for this level, maybe a support level back here, and we got that nice reaction off that one, right? So they're not all like that though, but by default the color is red. You can change that color for the block. So CTF bullish P block is here. We can change that to any color we like. You can even make them the same color if you want. That's usually what I do. So these end up being the same color. And it just allows you to see these levels. You can change the transparency of them as well, so they're not so much in your face. What's in here? This one. You can also change the candle colors as well. So the actual power candle itself here, you can make that whatever color you want, and change the transparency of that color as well. Okay. So at the moment we're only seeing two, but we can see that there's much more of these P's, right? There's a P here, 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 but we're only seeing two lines across the screen at the moment. The reason for that is because we've got this number here, 10, right? So what it's doing is showing the current time frame P blocks, support and demand, the SD, right? Percentage away from the candle. So current candles here, so 10% up and 10% down, it's going to only pick up these two P's and show them, okay? But if we go and increase that number to say maybe 50%, we'll see a bunch more of these lines come up, right? So the reason we have that control over the chart is so we can reduce the noise on your screen. We don't want to blind you with all these intense lines on your chart. So what we can do is, if you do have lots of them, you can change the transparency right down, right, and then work from there. This is a good example. I'm not saying it's long every time it comes down to your level here, but price really seems to respect these particular levels that we've pointed out here. So have a play around. They work on all time frames. 4-hour and daily are key for me. Cool. So we'll move on next part of this. Alright, so we can change how many bars back it looks. What that means is if the current price here is, and we only want to see the P candles from this area, so we can look here, that was 78 days back, or 78 bars back in this case. So we can go back into the indicator, we can change this to 78, and what we'll see is all these ones over here, they'll disappear, because it's only showing us the ones back to here, right? So you can help reduce the noise on your chart that way as well, by changing how far back it looks. By default, we've got 500 because you really want to see the levels to the left. Because it's hard to quite navigate, like where is the right candle to go back to and the rest of it, we've got the next option for that as well, is this box, this new box we've added. Okay, pretty straightforward, but I'll show you how it works. So I'm going to change that to 20. So this red box is going to appear, and it's going to let you know where it's finding the P candles. So if we change this value here to 70, the box will increase slightly, alright? And then it will start showing this candle here as well. But if we go back to 50, it won't show that the block for that level, okay? So you can then turn that back off if you wanted to fine tune your charts. It's just a real noob friendly way to just reduce the noise to a certain area of price action you want by just changing these values here. This option here is how many P candles show at once. So if we've got that say 500 and we have that say 100, it's going to get quite noisy. But if we want to reduce that to say I only want to see 5 of these, right, it's going to show you the 5 closest ones to price action. If you want more, you can increase that. But we suggest to have it under 50, because now you got all of them, right? But when you've got too many, it'll create a load on the trading view, and you might get a bit of a laggy, it might start slowing down your trading view experience. So try and reduce this number if you can, reduce these numbers where you can, just to have a better experience. And then we've also got the outline outside the percentage window, okay? So what this means is if we've got this range box up and we change that to 70, and we go and change this to say 20, maybe make that 20. So any of the candles that are outside this box are still going to highlight, okay? Show the outline of them. Right, so we go and maybe change it to 500, we'll see a bunch of outlines come. You can't quite see them, but they're there, like from here to there, that's 1p. But it's just showing you that it's an outline. So when we zoom into price, you can't quite see it there. There's a line that goes across here. Now this is the body of that P candle. So it's a good way to reduce the noise on your chart as well. But if and when price comes up, right, then this box, this red box, will also move up with price because it stays a certain percentage away from the price. And then by the time it's moved up, say 10%, this has moved up 10%, this block here will become visible like this box here. So it's a good way to be able to say, okay, well I know where my levels are. They're very faint, but I know where they are. So if price gets a bit crazy like this, then that's the level we're going to be looking for, alright, when it comes down to it. Because if we were to change this percentage to maybe say 5% away from price, right, we didn't know that there was, and this was falling straight through our box, right. At first we didn't know this was going to be a level maybe to look to buy. But when it comes closer to price, say down here somewhere, then we'll see this red box move down, and then it'll highlight that one. So a really cool little feature if you play around with it. A good way for you to learn these. And then you've also got the colors through here. We've got wash blocks. Wash blocks is a new feature. I'll explain that real quick actually. So what we've found with this particular level in price, that price loves to come back to this level. So here's a really good example of this, right? So when we look left, there was no key level. The key level being the high of this body here, or the high of that body there, that was the high. But it came back to this particular level, which is just a random candle over here. Alright? It still respected this level. So what we've got here with the washed candles is that when it comes back to that level, it washes it. So if we got a new one here forming today, then tomorrow it won't be washed. It has to come away from it and then come back to it to wash it. Right? So what we found is price likes to gravitate back towards these levels once it's left them. We might be able to find a good example of that on say the 4 hour. Let's let it load. Cool. So all of these ones are currently washed, but if we were to use maybe the replay tool and come back to maybe here, let that load again. You can see the loading up here, the 3 dots that it just dancing. Cool. Okay, now they're all washed as well. Okay, I can wash it through here. So The way that works is if you've had a candle that come up like this, right, and then you've had another candle that come up like this, and then you've had one more, and this is your P candle, right? So this is the P. If price carries on, or just goes sideways and then carries on, but doesn't actually end up coming back through this at all, that'll be a candle that hasn't been washed. If and when it comes back to it, it'll wash it, okay? But if we go and look at maybe the daily time frame, get rid of this, and we'll just zoom out a wee bit. The replay tool does say here. I have to go back forward like one. Okay, so it's washed it instantly. It's annoying. If it hadn't, it'd still be the same color that you previously chose based on these colors here. Washed by default is yellow, or this gold color. Okay, so if it's gold, that means it's been washed. So we find even though that price will pull away from these levels, it'll come back to them. Okay. Alright, cool. We'll move on from that. Let's go back to current price action. Let's remove the drawing. Next up is the multi-time frame power candle. So let's say, for instance, you're on the 4-hour time frame. We'll get rid of the current time frame ones. But let's say you're on the 4-hour and you want to see the daily ones. Okay, so when price comes fine down to a daily one, you want to try and enter on the 4-hour. So this is a good way to see the daily ones, and then you've got the same options here, right? So you can choose the percentage away from price, how many candles, so how many particular power candles in total you want to see. So maybe you want to see 20, we can change that to whatever. We can see that same red box that draws where it's looking for them. So if you're trying to get a specific area that you're trying to narrow down to on a different time frame, it's a good way to do it. And then you've also got the outline as well outside that box, right? So we can see the ones down here that are just hollow boxes. Just keeps your chart a bit cleaner when you're not close to that area, okay? Next up is the high highs, high lows. Alright, so it's going to tell you based on price action swinging. So it hasn't put in a new low here yet, but there's also no new high. Alright, so this is the previous high, we can see that here. This is saying that's the last high. This is saying this is the last actual low locked in. Alright, so that is the last swing. We're still in the swing essentially. If and when this updates, the last lower low will end up reprinting down here. So it's just help you to guide through trend. If you're someone who has a harder time reading the ins and outs of the trend, then that can help you out. Or just look, there's maybe key levels to look for if and when price comes to those. Right. So I'll just move on from that. Cool. Okay, next up is the pivots. Pivots are an indicator that we've added to this. It's a free indicator. But what we've done is giving you the power to be able to show them all, or the ones you want, because usually you can only see one time frame. So this is a multi-time frame. In a sense, you get to choose which ones you want to see, and then also how far away from price you want to see them. So usually pivots would be, say, a horizontal level here, and then maybe here, and then maybe here, right, and then maybe even one more up here. This will be your P for pivot. This will be your R1, resistance 1, R2, resistance 2, okay? So instead of having all that mess all over your screen, what we've done is broken them down to only show you what's available based on what you've ticked down here, okay? So if you only want to see the yearly ones, and you only want to see them maybe 20% away from price, and you want to see that text of that maybe 20 number of candles away from price. So if we were to zoom out, there's really no yearly pivot available because we're not close enough. Oh, that's alright, there is one here. So because we're close enough to price, that's actually really relevant. Holy wow! There you go. So this is the power of the indicator. I wouldn't have checked that, but because you can quickly just glance through them like this, and it's so close to current price action, it doesn't take up a lot of real estate on your screen or make a mess. And you can just have them so they're available there. Right, here's the monthly one. The one we just had on before was yearly. You can have both of them if you wanted. Pivots are very powerful. Definitely worth taking the time to learn how to read pivots. Essentially, it's just a bunch of these horizontal levels. We'll just quickly draw it in. So you'd have, I'll use a different tool. So you got, say, all these different levels, as we said before, there was a P, there's an S1, there's an sorry, this will be an R1, R2. So as you get away from price, the number increases. And then as it gets further away from price, the number for support will increase. So that's support 1, support 2, right? These are based on math, based on the price action that happened in between the previous period here. What we find on how you navigate these is if price comes into it and rejects it at the beginning of the trading session, so maybe this is 1 month period, then you usually find that it comes down to support before then deciding if it's going to come back up or if it's going to lose support and carry on to the support 2, right? So definitely worth taking the time to learn pivots because this is a powerful way of doing it. Look at the precision. Look at the precision of that. The high time frame pivots are highly respected. You can see this goes from pivot perfectly to pivot perfectly. It's not always the case because over here it's messy, right, and over here it went straight through it. But it's definitely a level you want to pay attention to. A lot of old big money likes these pivots, so definitely worth paying attention to. Then you can also change the colors of each of the time frames you want. Okay, it's pretty straightforward. Next up is your fibs. So your fibs are automatic base fibs. So we're just going to throw them on the chart, or maybe jump on the daily time frame here. So what it does is it's fibbing, right? This is on a linear. So see how it says LIN? That means a linear scale, LIN. It's gone from this high here, where it says 0. That's the high, and then it's gone from 1, right? So it's measured this low here, right? That swing low. There's been a rally off that. It's came back up to the 618 here, and rejected off the 618. As then it's come down, hit the 618 extension, reclaim the 414 extension, and now it's having a hard time with the 272 extension. These are targets based off whatever plays out here. Okay, so to use this correctly, there'd be a swing low. This would update and go here, and then tells you where to expect resistance on the way back up. So it came back up to perfectly to the 618 here, right? It's perfectly rejected, and then sold off. Okay, so it's telling you where to look for targets. Now this isn't always accurate, but it's usually quite likely. You go from a gold color to a gold color. Okay, it's not always the case, but if you backtest this and you'll see this. If you reject gold, chase gold, or if you reclaim gold, then chase the next gold. If you reclaim that gold, then chase the one above that. It'll be up here, right? So these fibs will update themselves based on how trend plays out, and then just go from there. We'll just go back to the indicator because there's more options for the fibs. The source here is the open and close of the body, or the high and the low of the wicks, right? So if you want to fib just the counter bodies, it'll slightly change everything a bit. Alright, so it's now got here as the low because it's based on the counter body, and here is the high. But we can see it's not quite the same. It's quite a bit different. Okay, so by default it's got the wicks, which is the high and the low, instead of the counter bodies. So I'd recommend the high and the low. You can choose log and linear. The levels are different. They do display different. Okay, because over here log and linear display differently. By default it's on linear. Linear is for lower time frames. Log is for higher time frames that also include a lot of time. So you could be on the high time frame on say the daily right now with normal fib tool, and you could be fibbing from here, right? But you don't need to be on log scale to do that. You can do that on linear scale even though you're on the daily time frame. But if you're doing a long period of time where it's like a couple of months, then you may be looking at the log scale, right? Because it'll change things a wee bit. So that's how that works. Cool. Let's get rid of the drawing tools I put on here. Let's go back to the automatic fibs. So these are automatic. They'll just constantly flow with trend. They'll update as trend updates. They'll give you targets. They'll give you levels to look for resistance. Definitely underrated feature. You've also got the targets, right? So we throw both of these on. What we can see is when we look up the chart, we've now got these targets. So what it's telling us, if we get a reversal down here, then based on this move that's played out, or this move here, and then the reclaim of this, these are your targets. So depending on if you're trading log or linear, or how you're operating, this is the linear target, and this one here is the log target. You can see there's a good $3,000 discrepancy there, right, between these levels. So just understand what you're looking at and what you're trying to achieve. I'd recommend, unless you know what you're doing, stick to linear. Unless you're doing a long period of time on a higher time frame, then look at log. You can change the color of the candles. I prefer black and gold, which you'll see load here. because that's what I was talking about earlier, is about the gold to gold to gold. So these are usually golden ratio numbers, the 618 and the 382, right? Because if you've got 10 and you take away 382, or sorry, 0.382 from 1, we'll say you got 1, and you take away 0.382 from 1, you end up with 618. And if you've got 1 and you take away 0.618 from it, you end up with 0.382. So these levels are actually identical, just in the way you've drawn them. Okay, so the 618 and the 382 are identical levels, they're just inversed. And then we've also got the gold down here, okay? So that's what that is. Remove the drawing tools. Come back down. Alright, and you've also got the fib pocket. Okay, this was requested by a bunch of people. The fib pocket is a level that, I think it comes down to the 6.5. So this is a golden pocket. We refer to this as maybe a golden pocket or whatever. But what it means is if and when price will come down to this, you want to look to buy the reclaim of the 618. But usually you'll see a bit of a run into this. Right, it's like a real, it's like a demand zone would be the way to call it. There's usually a lot of buyers stacked in this kind of area if price is coming down to it, or coming back up to it resistance. Once it support, it will push off that. So it's a key zone, a key pocket of trend. If we were to manually do that on our chart here, just quickly flip this from the wick right to the wick. If I were to manually include this to the chart, it'd be about this area here, right? So we can see as the price has come down into it, as I tried to defend it, it's rejected the 618 and since come down, right? So that's the pocket, that's how it's formed. It's pretty straightforward. It's a good little pocket to pay attention to, because if you're getting nice bullish price action off that, maybe bullish divergence, SFPs, buy signals, etc., you might get a nice long off that, or short in the inverse. Right, so pay attention to that. You can also offset the text of this, which just drags the text across to the right. So if you ever see text offset, all it does is change how far away the text is away from price. Okay, because sometimes it's too close to price for your liking, like this for instance. Maybe that's too close because you've got other information here, maybe like Ichimoku or something. So that's what that's for. You've got alert entries. Okay, so these are based off the pivots. These are the fibs, right? The fib pocket. And then also the bullish power candle and the multi-time frame power candles. And then you can choose how it operates with these levels, right? So you only want pin bars. So if you want a pin bar off a daily pivot, you tick these two, you go OK, you go up to alert, you choose the indicator, Oracle, and then you just go create. Okay, you don't press anything else, you just, I guess you can choose what you wanted here, but don't muck around with this, just leave all that. You can choose how it alerts you, maybe the sound it chooses, and just go create. And what that does is when there's a pin bar off a daily pivot, it'll give you an alert. Alright, so you can customize that however you like. There's many different variations. I think yearly pivots are a huge thing. A retest of a yearly pivot, right? So if we were to have that on, then we go down to the yearly and go OK. If and when price comes back to it, it'll let us know. If when price comes back to it, it'll let us know. You don't have to reset it, it'll just sit there and remind you every time that happens. So again, like that could have been too nice. Heads up, like maybe you come to a key level, maybe you need to pay attention now. If you were just ignoring all of this because you solved the SFP bear div here, right? Because the price made a higher high, that's, while the oscillator, which we'll get to shortly in the next video, would have made a lower low. Right, and then SFP comes in, your reaction, and now you're down at this key major yearly level. Okay, so a lot going on there, but other than that, that's pretty much it for Oracle. I'll move on to the next indicator tutorial. Cheers.